Welcome back, everyone. Michael Rosmer here with Offshore Citizen, and today we're going to be discussing the subject of what is territorial tax. All right, so before we get quite started, please, if you're not already subscribed, click the subscribe button, click the notification button, and let's dive into it. Okay, so I have a video on what we call taxation basis. You can go and check it out. I cover kind of loosely this topic, but we're going to go dive specifically into territorial tax and how it might apply, because I hear a lot of different, sometimes bad information, sometimes kind of confusion, etc. And so the question is, what is territorial tax? Okay, so it's a form of what we call taxation basis, and what it means is that when somebody is resident in a place, it only applies to residents, not to non-residents, then they only tax in some way, shape, or form what they determine to be local income. Okay, now the definition of local income is where this gets very tricky. Okay, so this might mean, for instance, that hey, they're going to tax all the active income, but they're not going to tax income from foreign sources. So one of the things that drives me nuts, like really, I don't understand how it's just such nonsense, but I see repeatedly over and over and over again in news articles, comments by various journalists, reporters who know absolutely nothing about this subject, they're total nonsense, misrepresenting and saying, for instance, that the U.S. is one of the only countries that taxes worldwide income, or that they brought in a territorial tax system, etc. And Canada and a bunch of other places have territorial tax. Nonsense. Nonsense, okay? Most countries in the world have worldwide tax, not territorial tax, okay? There are some exceptions to the worldwide tax under participation exemptions that sometimes come in. Yes, that is true. That is not the same as territorial tax, okay? So it's worth, looking at whether that's a healthy thing or not a healthy thing for a country and all that. That's a whole tax policy discussion. But besides that, the subject is for you as a person, probably some sort of an entrepreneur, whatever, investor, you're looking at, hey, listen, how does this apply to me? Well, say you move to Panama, right? Panama is a really common one that has territorial tax. Now, here's the thing. What a lot of people misconstrue here is they say, oh, my customers are abroad, therefore I'm not taxable. And by the way, this happens in reverse too, right? People will be like, oh, my customers are in the US, so I'm worried about being taxed in the US. No, you're not. You're generally not taxable where your customers are. Okay? It does depend on the type of income, and it depends on the country, etc. But usually speaking, you are not taxable where your customers are. Usually speaking, you are taxed based on where the company is resident and or where the work or permanent establishments are, okay? That's usually where you're taxable. So, what does this mean? If you have a Panamanian company, or a Costa Rican company, right? So you're like, yeah, I have a Costa Rican company. Costa Rica has a territorial tax system, and you have customers who you're selling to in, I don't know, pick London, right? And you're like, hey, listen, I've got these London customers, territorial tax, I shouldn't be taxable. No, not true. They're going to tax you. Now, again, what happens on paper versus in reality is also an issue here, because the Costa Rican tax authorities are a little whack, okay? But that's a whole other conversation. The point is, if you're sitting there doing all the work in Costa Rica, you're probably taxable in Costa Rica. I'm not going to say inherently you are, but probably you are. And this is often the case, okay? So you just have to look closely at, because it's defined country by country, and it tends to be different. What it's often going to mean is, first of all, often dividends will be not taxable. Now, there's some exceptions to that too, because, for instance, we can look at Singapore, and in the case of Singapore, often dividends are taxable in Singapore, even though Singapore has a, I would say it's like a territorial quasi-remittance-based tax system, okay? In spite of that, generally speaking, getting tax-free dividends in Singapore is a little bit tough. There's not a lot of options for it, okay? So let's say that you do that though. Okay, perfect, wonderful, off you go. What's next? You could look at countries such as Malaysia, a bunch easier to get away with, I would say. Hong Kong, a little bit easier than Singapore. You could look at, Uruguay, Paraguay, some of these countries in Latin America where it's quite common to have territorial tax. And, you could say, okay, well, in a bunch of these cases, you're not taxable if the income is foreign. It's foreign source. So, in other words, are they sending it from abroad? Is it coming from you know, so for instance, let me use an example. In Malaysia, there was a case where a Malaysian, I can't remember if it was a company or an individual, lent money to, I think it was a Dutch company, might have been a Dutch, Belgian, something like that. And in that case, they said, hey, well, the interest should not be taxable because we have a territorial tax system. Now, the tax basis is not defined in Malaysian statute, so you know it had to be figured out. And they looked at some of the rules from Hong Kong and from Singapore in this case. Okay. Now, what ended up happening was the argument for the Malaysian tax authority was, hey, you should be taxable because look, according the money that was lent out came from Malaysia, right? So notice this logic, right? Notice how, where's the territoriality here? Is it where the resources are coming from, or is it where the resources are being paid from, right? The profits being paid from. So the taxpayer argued no, that it shouldn't be taxable because the payments are coming from Europe, and it turned out that in this case the court ruled with the taxpayer and it was not taxable. Okay, so that was, you know, some case law which is useful. So the whole point of this is just to say that it's this idea that you don't pay tax on foreign income, but how we define foreign income is often quite tricky. And we can look at this in cases of pensions, in cases of different types of investment income, in cases of where our customers are, in cases of where we receive, where the work is done, etc. And you can say, okay, well, you may have a company that's a local company that the work is done abroad, but and the customers are abroad, but it's still considered to be local income. So that's, you know, just based on, you really have to pay attention to the details. And this is the thing in international tax planning. The details really matter. I'll try to do maybe some cases over the next little while for you guys to explain some examples to try and get kind of these points across, because I see some nuances that come up. I was watching something, I was talking to a friend yesterday, and he was going through a case where two accountants in different countries were arguing back and forth, and I was kind of explaining how it went in that particular case, where they were off base and things that they were missing and things like that, because they didn't understand the international consequences. So anyway, I hope that helps. If you guys like this video, please click the like button. It helps us out a lot. Please click subscribe. That's even better, the notification bell. I'm working on getting our subscribers up. Share it with your friends. It's helpful. If you have questions, put them in the comments. I would love to hear from you, hear what you think, if there's a specific case that you hear about or something that you're wondering about, etc. If you'd like to book a call, you can do that at the link below, clarity.fm/Michael Rosmer. You can go and you can check out our websites, offshorecapitalist.com, offshorecitizen.net. If you're looking for companies, residencies, citizenships, bank accounts, tax planning, asset protection, trusts, there's probably a few other things in there, payment processing, a few other things, reach out to us, and I will see you guys on the next video.